Welcome to Technical Analysis Basics. In the Trading Basics series, we cover the 3 principles of technical analysis.
We already know that technical analysis is primarily used to identify the next trend as early as possible. This gives the trader the opportunity to ride the trend and take advantage of a potential rally. Traders have a lot of tools to help them in the quest to find the trend. For example, popular price patterns such as the head and shoulders can assist. Trendlines guide traders to navigate the financial market, like a compass guides a sailor to navigate the open seas.
If the price honors the trend line, the prevailing trend remains intact. If the trend line is violated, this is seen as a warning.
Indicators and oscillators are also very popular tools for technical traders, and the MACD is among the most widely used. When the MACD crosses above the zero line, it can signal upward momentum. When it falls below the zero line, it can signal the beginning of a downward movement. Traders are advised to combine a variety of tools, rather than taking the much riskier option of relying on a single one. Learn to trade consistently. Master the financial markets with Britt Online Trading Academy. Subscribe for more.
Forex and CFD trading involves substantial risk. It may not be suitable for every investor. Never trade with money you cannot afford to lose.
Please like and subscribe.